Good morning, good afternoon, good evening, everyone. Welcome to Datacloud Global Borderless. This is Broad Group's flagship online event. We would like to thank our sponsors for the support and for adding quality content to this platform. Thank you to our media partners as well. Today, Datacloud Global Borderless will include several sessions on edge computing, focusing on investment and the ecosystem for the edge. On the 3rd of June, we invite you to join Data Center Leaders Global Keynote, as well as our exciting energy and cooling session. On the 4th, Thursday, we'll offer the audience a complete global outlook of business activity in the data center markets, covering investment, market analysis, and M&A activity. You will be the first to experience our recently launched State of the Market sessions focusing on Brazil and France. Broad Group will continue this series market by market from June until the end of September, so stay tuned. Lastly, we are very happy to deliver crucial content on marketing and strategic PR for DCs, which is a key element for our expanding industry right now. For today's session, please use the Q&A function on your toolbar, and our moderator will direct these questions accordingly. Without further delay, I would like to introduce João Marques, Editor-in-Chief of Data Economy, and Andrew Power, the CFO of Digital Realty. João, over to you.
Thank you, Ivan, for the introduction. Thank you, everyone, for joining us in what is our virtual Monaco, the first one ever. Digital Realty needs no introduction. This is one of the largest data center players in the world, with 267 data center facilities across the planet and a market value of about $38 billion. Joining me is Andy Power, the CFO, and let's get started. Andy, thanks for joining me.
Thanks for having me, João. Very pleased to chat with everyone virtually today.
Let's address the elephant in the room to start with and get it out of the way as well. How have you and the business been coping with everything that's been going on with the COVID-19 pandemic?
Well, thanks for bringing that topic up, because it's a very important one here at Digital Realty. I can tell you, no one ever fully prepares for something like a global pandemic like we're seeing here. But I was very proud of our team thinking ahead, planning ahead on numerous fronts, and springing into action across the board, really putting our customers, our employees, and our partners first and foremost. We went to essential staffing at our data centers early on. We took extra precautions in terms of cleaning and temperature taking, and really tried to make sure only the critical employees and customers were inside of our facilities. We've stayed operational. We've also, from a corporate standpoint, we're in the early category for moving to a fully work from home environment for corporate staff at Digital Realty. That happened in early March. Furthermore, our supply chain has kept us intact and insulated from any shocks. We're developing close to $2 billion of data centers this year. We're quickly getting that number of data centers closer to a round number, maybe north of 275 very quickly, so it's easier to keep top of mind. And we had to make sure our supply chains were insulated. So that team did a very good job of getting ahead of it with vendor managed inventory programs and the like. And lastly, but not least, I think we also made sure that we were giving back and supporting our communities. So not only via our product offering, where we made certain connectivity offerings free of charge to numerous industry verticals most impacted by the crisis, but also reaching into our own wallet and making charitable donations in the broader backdrop of this crisis.
Okay, thank you for that. But let's say from a business point of view, and perhaps even more as a real estate brand as well, are you concerned by how volatile the markets are at the moment? The massive surge of unemployment across several of the regions you operate in, the uncertainty we all face over the next few months, and the potential long-lasting effects that this is going to have as well?
You know, I would say from a broader economic view, I would put myself more in the camp of a flat U-shaped recovery, not the V bounce back many prognosticators have been speaking to. I look at obviously rising unemployment rates, a disruption in all forms of business, while the search for a vaccine continues. And I would also say that the volatility in the capital markets, access and pricing, to me, just points to a world where capital has become a lot more precious. Fortunately, on both of those fronts, I would say from a capital standpoint, our balance sheet strategy of really being fiscally prudent, maintaining conservative leverage, ample liquidity totaling close to $4 billion of digital, no near-term debt maturities, and proactive financing have kept us in a good position to really weather this storm and fund our future growth for our customers. And from a business standpoint, I think we're also blessed to be serving a really critical infrastructure place in this world. It's within our four walls that the space, power, and connectivity is operating virtual calls like this one, and business is getting done, and the internet is essentially flowing to those who need it in these times of crisis. And so our businesses remained rather strong in the light of this backdrop. Our exposure to the industry verticals most impacted, think retail, travel, lodging, leisure, oil, and energy, is very modest at less than 5%. And overall, I believe crises like this will continue to be probably catalysts for further digital transformation, where broader global enterprises think about where their workforce will be positioned, where their consumers and partners will be positioned, and how to make sure that their infrastructure, their connectivity, their compute is best positioned to stem off future crises like this, and really digitally transform their business.
Okay, thank you, Zandy. That's actually quite interesting, but because before we came online, the Financial Times just released an article with headlines saying that data centers stock surge has the world shut in sight, and that investors consider data centers as a haven, as a safe bet in the current world we live in. Do you agree with that? Do you agree that data centers are a haven for investors? Are data centers crisis-proof?
You know, I have not read that article just yet because it's I had to get up close to 5 a.m. to make to make this call work from San Francisco. But the theme of the article is very consistent with what we've been seeing. I mean, I would say whether it's our stock price, our credit spreads on our bonds, our cost of financing overall, have been the benefactor of flight to quality, stability, more recession resiliency as a business. Just think of how critical the services we are providing to the economy and every parts of your daily life, which probably are further accentuated when you wake up in the morning, check your iPhone for emails, dial into your Zoom or Blue Jeans conferencings, you're working on a Microsoft Teams, and probably finishing your day hopefully with a Netflix movie or something else in a streaming capacity. So not ever bulletproof. I never have that type of arrogance, but I'd say the capital markets and investor landscape have acknowledged that our businesses does have many very strong characteristics that kind of hopefully stems any headwinds from an economic downturn. I'd also lastly say we fall into a infrastructure and REIT category, hard assets that have value, and also we pay a current dividend. And when you have declining treasury rates or equivalents around the world, that's another reason that I've seen that a capital movement towards digital realty.
Okay, that sounds great, and it sounds in line with what we've been hearing from our executives as well. Moving into maybe the strong characteristics you're talking about digital realty as well. Without the pandemic, you still are the largest data center operator in the world by number of facilities. You have a market cap of 38 billion, over 38 billion as of this morning. You've had in the last 2 years, 2 of the largest M&A deals in the history of the data center world. So that's Interaction for 8.4 billion and 2.5 for 7.6 billion. let's go on a trip around the world in 8 minutes, not 80, but in 8 minutes. How's the business performing across all regions? So Europe, North America, South America, and Asia.
Give me 30 seconds in addition to the 8 minutes to hit on that. So I think you hit on a important point. Over the last 5 or so years, we've worked very hard as a company to position our portfolio and our platform to really provide as much value to this broad of addressable customer base as possible. So through organic and inorganic activities, like some of the mergers and acquisitions you mentioned, we really tried to become more global, now spanning 20 countries and 44 metropolitan areas. We've become much more scale, $50+ billion of enterprise value, the largest by square footage or number of data centers. And lastly, the full product spectrum from those colo and connectivity suites all the way to the hyperscale, multi-megawatt dedicated data halls. Right now, the business is performing fairly well across the board. That's across geographic regions, and it's also across product lines. I'll try to do this in a very non-US centric way and kind of start with Asia Pacific, who woke up first this morning. Some very interesting things happening in our Asia Pacific portfolio. It is that in Latin America are the smallest slices of the portfolio, call it both in the 5% area. Asia Pacific activity has been very much accentuated in a couple of our key markets. Singapore, just like the old days when Singapore was a hub for trading and goods, Singapore continues to be a hub for technology and data. We are very well positioned there. We just announced powering on our Sing 12 building in the eastern part of Singapore, landed an anchor customer, top 5 cloud service provider, and also one of the major Asian Pacific banks. So both enterprise and hyperscaler CSPs starting with us on what will be a colo and hyperscale campus totaling 50 megawatts. Shooting up to Japan, our MC Digital Realty partnership with Mitsubishi Corporation is doing great work in both the Osaka and Tokyo market, catering to inbound demand from multinationals, and also doing a nice job supporting the local Japanese customers. And we've had some great wins so far in both of those markets. And last but not least, very excited about our activity in Seoul, South Korea. We're bringing online the first carrier neutral facility, a highly connected co-location site, really one of its kind for that market, and have had tremendous customer inbound already, even though we're just starting the construction of that facility. Hopping down to Latin America, Brazil is our largest portion of our Latin America footprint. We have a very strong market leading platform called Ascenti in partnership with Brookfield Infrastructure. That platform we acquired roughly a year and a half ago. We've subsequently expanded that into Santiago, Chile. It's been very customer led, meaning we went to Chile with a customer in tow, identified a site, and really was a kickoff for that project. Back in Brazil, we have the full product spectrum within Ascenti across several markets, including Rio and Sao Paulo. And we also have a proprietary fiber network. And that's a platform I could see us expanding into at least 1 or 2 other Latin American markets in the future. Hopping up to North America on a colo and connectivity side of the business, financial services vertical has been very strong in the Northeast, specifically New York Metro. We've seen a resurgence of demand in the Atlanta Metro for colo and connectivity, as well as Chicago. And our largest market, Ashburn, Virginia, has had 3 great quarters in a row, getting into a very broad brush demand from both multinationals and domestic customers, enterprise customers, network customers, and cloud CSPs. Last but not least, EMEA. We welcomed into the Digital Realty family our latest combination with Interaction, a digital realty company that just closed in the month of March of this year. And we've seen strong demand in those the historically strong flat markets. Frankfurt in particular is a market where we have a very strong leading position, and we've seen demand well outpace supply. And I think we're very well positioned in a combined basis in that market. but we're also seeing more budding opportunities in some of the non-FLAP European markets, where Interaction has had a long-standing presence and highly connected assets, be it Marseille in France or other countries within Europe. I'm sure I left a lot of great markets and customer verticals out in that quick tour of the world, but that should give you a quick rundown.
Well, I know I'm glad you stuck to the 8 minutes, even less than that, actually. Let's just picking up on some points there, especially in Asia. A really interesting development that you had a few months ago, 7 months ago to be more precise, was the memorandum of understanding with the Adani Group. What's been the developments? What developments have you had over the last 7 months? And when are we going to see the Digital Realty logo on Indian soil?
So that announcement actually was concurrently with our acquisition announcement with Interaction. So it did get a little bit second fiddle with an $8.5 billion merger announcement. But nonetheless, it's a very important move for Digital Realty. I'd say a few things. The opportunity is very large, India, in terms of size of country, economy. This would be our second, I would say, developing economy. So similar to how we looked at entering Latin America and Brazil in particular, we look to do that through partnership. In this scenario, we very much valued a local partner. So the Adani Group is a long-standing enterprise across India, across numerous industry verticals, transportation, logistics, renewable power, energy overall, toll roads, and construction. They do not have much experience in the data center business. That's where we come into play, bringing a global customer base and a close to 20-year track record of design, building, owning, and operating this critical infrastructure. This, like every other new market entry we've done at Digital, has been very customer-led. We heard from numerous existing Digital Realty customers about the need for our type of infrastructure to the caliber that we design, build, and operate within India. India as a country has also been progressing more of an onboarding to their data from a regulatory standpoint. So I think that's a further tailwind to demand. But that being said, this is a new market. It is developing. We are taking a very prudent approach to do a lot of homework with our partner to see if we can come to the right structure of a deal and a combination to really support that demand. So we've extended our MOU, which ran for, I think, roughly 6 months. We've extended it to continue that work. We're in deep dialogue and diligence on finding the right markets and the right structure. And I think we'll have more news to report on that come the fall.
Interesting. So 6 months away, more or less. Well, less than that. 3 months or 4. In Latin America, so you said potentially 1-2 more new markets outside of Brazil they're going to be jumping into. What can you tell us? Where are you thinking of going?
So similar to a couple elements, we're typically focused our efforts on countries and cities with population density, GDP, really the major players for any geographic region or continent. That's what we did in Brazil, similarly in Santiago, Chile. Secondly, again, it's very customer-led, follow where the customers need us to be. So we're in-depth private conversations with numerous customers across various verticals. Typically, the large cloud service providers provide for the most prime anchored customers, given their size and scale of their initial deployments. And I think you could think of 2 of the largest countries that we'd be thinking of are just south of the United States is one particular country, Mexico, where I think there's a lot of opportunity. Digital actually historically has been in Mexico before. We had an investment there that was productive for the company that we ended up monetizing. So we do have some familiarity, but think of those type of elements when it comes to that type of expansion. Major markets, GDP, population density, and customer-led, where our customers want us to support their growth.
Okay, and just we actually got two questions from the audience, which I'll pick up. I won't leave them to the end. But first, I just want to talk about Africa just a little bit, because through interaction, you have a hand on iColo. What are Digital Realty plans for Africa with iColo and even outside of iColo? What's the view of the markets? What are the plans?
Sure. So the this is really interactions activities prior to our acquisition that really drove this really interesting opportunity that they've executed upon. Going back more than a year, they made a minority investment in a smaller player in Kenya called iColo, really with infrastructure based in Mombasa on the coast, highly connected location, really dovetailed nicely with the interactions positioning of the Marseille asset with subsea cables connecting continental Europe down into Africa, and numerous connectivity customers seeing that opportunity to branch out their infrastructure into the African continent and looking for ways to do that. So again, similar to Digital's approach, Interaction was very customer-led with it, very focused on connectivity, subsea cables. That iColo investment further grew into capacity in Nairobi, so a second city within Kenya. This is still rather small, especially in the context of the Digital Realty footprint. We're talking handful of megawatts when Digital's over thousands of megawatts. But last but not least, which was also very analogous to Digital's approach to entering developing countries, subsequent to gaining control of the iColo investment, Interaction looked to partner. And they brought in a partner called an infrastructure fund focused on Africa called the Pembani Remgro Group. And that they came in as a third-party investor into the iColo business, not just for the capital required to continue to grow that business, but really looking at with a broader lens of aligning with the appropriate partner to fuel additional growth for the Interaction of Digital Realty platform's growth across the African continent. Obviously, the stakes have even changed further now that Interaction is part of the Digital Realty family and has a much broader balance sheet. But I think if we were looking at that on our own prior to the Interaction combination, I think we would have taken a very similar approach of how we would approach the market, how we thought about putting the customers first and foremost, and how we would have thought about partnering to make sure we tackle this opportunity prudently.
Okay, that sounds good. Just up in Europe now, some of the questions that we're getting now, it's about potential plans for Central Europe and Eastern Europe, as well as the Nordics. What's Digital Realty's stand on those two markets?
So both of those are opportunities that through Interaction, a Digital Realty company, we're keeping a very, very close eye on, or have some form of smaller presence to date. And it was all through our Interaction combination, not through legacy Digital Realty. I think the Interaction team has done a very great, very nice job over several years of really finding the most highly connected assets, and then really taking that connectivity to a next level in terms of network density, in terms of attracting magnetic customers, and really making that sure that the customers are gaining as much value as possible from landing in our locations. And that played out in places across the Interaction portfolio, whether it's Marseille in the south of France or other markets within Europe. And I think that same playbook will likely unfold both as we look further east or Central Europe and also into the Nordic regions where Interaction already has a small presence to date. As I mentioned in my less than 8-minute tour of the world, that what historically been a very flat market dominated conversation for our customers in Europe has really started to bud out into numerous other European countries that we've seen not only demand from local enterprises, but those same top cloud service providers that are buying with Digital Realty across our global platform, expanding their infrastructure into more and more European countries. So we're quite optimistic about what we're seeing there, and I think it will include some of those geographies you just mentioned.
Okay, that's good. Thank you, Andy. One last question from the audience, Fernando, and I'll keep everything else to the end. We've seen quite a lot of big financial deals being announced this year so far. We have, for example, KKR's investment in GTRs in Europe for $1 billion. We had Equinix yesterday with Canada data centers. Are we going to see a massive deal coming out of Digital Realty this year?
You know, I would say at Digital, we're very, very focused right now on integrating our combination with Interaction. That certainly is priority 1, 2, and 3. And I also would say, when you look at our portfolio, the puzzle, we've worked very hard over several years now to put the puzzle pieces in place to have the highly connected destinations, to have the connected campuses with a runway for scale and hyperscale growth across most of our major geos. When you look to EMEA or Europe, I think those puzzle pieces are very intact, and I don't see a large opportunity that would be complementary or strategic to us. I think that same story holds for both North America and Latin America. And lastly, APAC, where I'd say where you have probably the greatest potential for inorganic growth, there really is just not the Interaction equivalent in that market. It's a market that is similar to Europe with different languages and cultures, but further segmented by the fact there's such great distances between the countries. So I don't see really any major M&A or type transactions in the offing for Digital Realty at the current time. Really going back to, I think we've gotten our hands on some of the prime locations, highly connected destinations, and are able to chart a very organic runway for our customers' growth through our land holdings, through our new sites like in Seoul, South Korea, and through our new market entries like we just mentioned a few seconds ago. I would lastly say, I think that the sign of what you're seeing of some of these deals, whether it's a transaction announced just last week, is the puzzle pieces of the prime assets, the best facilities, the best locations are really falling into the permanent homes. And whether it's ourselves or Equinix, in my opinion, the competitive distance between ourselves and the next competitor is really widening, and that moat is increasing, making it much, much more challenging for any other competitor to really offer a platform like Platform Digital offers, with the full product spectrum across those 20 countries, 44 metros, and growing. And we're seeing our customers, whether it's enterprise customers or large cloud service provider customers or anything in between, really wanting to align with permanent, long-standing partners with the full product connected spectrum of offering on a global scale, which I think that's what you've seen this M&A play out over the most recent years.
Okay, thank you, Andy. But so if we look at the bigger picture, for example, with everything that's happening across the world now, with or without the expansions, we can't face off the risks associated with the regions where you might invest. And COVID-19 might not be as much of a threat to an operator like yourself, but how do these situations, like, for example, the US-China trade war, Brexit, the conflicts in the Middle East, the uprisings in Latin America, even the more recent George Floyd riots in the US, how do those things impact your roadmap, and how do you manage the risk in those situations?
You know, let me pick up on the last piece, because it's just so timely. And I'm obviously living and working in San Francisco, a city that has been impacted. The mayor's curfew literally lifted at 5 a.m. this morning, so just in time for me to find a quiet place to take this call. So very in front and center. I can tell you, we are really deeply saddened by these terrible events. and our hearts go out to all the victims across the board, and really just saddened by this, and really wish this violence and all this awfulness just didn't have a place in our society. When I kind of dovetail that with some of the other themes you mentioned, whether Brexit activity and kind of a pulling together of our social fabrics and countries coming apart and the barriers going up, or friction between global trade, or just broader conflicts, I think you're seeing on the one side a reason why we at Digital Realty must be vigilant in our approach to protect our employees, to protect our customers, and protect them from a human standpoint and also from a business standpoint. And the business standpoint is making sure that we are equipped to withstand whatever the crisis may be, whether it's a pandemic, whether it's a global trade war, whether it's a social unrest, and making sure we're taking that job not lightly at the very least. So insulating our supply chain from disruptions, equipping our team members for the operational support, making sure we're investing the technology for those customers, or our employees to support those customers and the like, and doing it in a very prudent balance sheet format so that we are insulated to capital market shocks and the like. On the other side of the coin of this, I don't see the trends of digital transformation going away. And on the one hand, while this world may feel much more separated and isolated in many regards, I think global engagements like this call you've set up, bringing in investors and research analysts and the like from around the world, really to discuss global trends and business and the like, is the better side of this picture. And I see a world where we serve a really critical place for our customers in providing global critical infrastructure, the connectivity, the capacity around the world, so that our customers do not have to worry about this in the face of a trade war or civil unrest or a global health crisis or a dissolution of Brexit. So I think digital transformation is going to continue. I think times like this may be a continued catalyst for it because we have such a globally linked supply chain and way of doing business and consumer. And I think our role for our customers, the bar keeps getting higher, and I think Digital Realty is rising to the occasion to support those customers in bad times and in good times.
Okay, thank you, Andy. I think we share your view on this message. Looking into the capital markets now, we've seen over the last couple of years, well, the last few years, and especially the last 2-3 years, a big increase on, apologies for the background noise, a big increase on private equity and sovereign funds investing into data centers. What sort of predictions do you have for the next 12 to 24 months for these guys?
You know, and no apologies for the background noise. I actually, I sneaked into the office to not wake our 3-month-old Madison and fear that wrath on this call. So
I mean, they've been behaving really well. They at least just started. They at least just started with this noise.
But you know, this is similar to a little bit of the comment about the M&A and capital. I think in a broader lens of time, not just the last several months, you've seen a few things. I think you've seen a maturation of our asset class. I think you've seen that play out in consolidation, where the critical and keystone puzzle pieces when it came to connectivity and data centers have fallen into permanent homes. And I also think you've seen a new lens on data centers as an infrastructure, as an asset class. And historical norms of views have kind of been flipped on their head. We kind of fall into this telecommunications infrastructure and also a real estate vertical, in addition to kind of the technology element of our business. And I think historically there was a view a less sophisticated view that, well, data centers are going to go away because all the data is going to float up into the ether, and well, my iPhone keeps getting smaller, so why won't the data center keep getting smaller? And there was much more of a preference for capital flows into more tangible infrastructure or real estate asset classes. So toll roads or ports or shopping centers, or apartments or hotels. And I think this has been underway for some time, but crises like the one we're living in, where the more core or historically normal real estate asset classes are suffering to such a great extent, and the technology verticals and the data center asset category are thriving, I think it's just speaking to the longevity of the services we're providing. So I think the broader capital markets, both public and private, have taken notice of this. They've rethought about their allocations to different, where they were allocated historically. And I think you've seen that come into the space, and it's come in various shapes and forms. Digital Realty has taken advantage of that. Those examples I mentioned, whether it was Brookfield Infrastructure is our partner in South America with Ascenti. We sold 1.4 billion of assets in an outright sale on a joint venture to a Singapore listed REIT and private investor called Mapletree. And we've had other various forms of private capital initiatives in the past as well. I think that they're here to stay. I think they provide incremental substantiation for the value and longevity of our asset class. I think in the long run, they're more friend than foe. I think they've become smarter allocators of capital as they've come to learn more about this business, and where they've had the episodic kind of come in with new competitive supply and disrupt the market. I think they've learned lessons and probably have some regrets about that. And they've seen the trend towards global offerings, platform offerings, full product spectrums, and scale with incumbent players. So I think if you'd ask any private capital partner whether they would like to go out on their own and go try to ground up, build something, buying some land with an entrepreneurial partner, or partner with a best-in-class provider like Digital Realty, I think they'd really choose Digital Realty any day of the week.
Okay, thank you, Andrew. And then I don't want to make crisis the key word for this conversation, but speaking of a different crisis now, climate change. How much does renewable energy and sustainability weight in Digital Realty's business strategy, and how much are you investing at the moment? In 2019, you had over $1 billion in green bonds, in green bond allocations. So where are you with this matter, and how far are you from reaching 100% renewable energy across your entire portfolio?
So we take this matter very, very serious, and we take it serious because it starts again with our customers. It's important to our customers. If you think who our customers are, in particular, some of the largest technology companies in the world, the majority of those customers have put out mandates of going to 100% renewable, making green a priority. And I would say the E within our ESG mandate is particularly strong and important, but we take the social and the governance almost equally as important. We're on the cusp of putting out our second ESG report that does a great job really articulating all the great efforts that the global Digital Realty team is doing day in, day out on this initiative. When it comes to our investment, we've done some innovative things. We've done the more traditional things like how we build, whether it's to LEED or BREEAM standards, how we operate, how we procure power for our customers. We made some great announcements alongside customers. Facebook was a partner in an announcement not too long ago. We've made some announcements on our own, including a large wind energy deal that's powering our Texas portfolio. We've made some other broader mandates in terms of moving to 100% renewable. And in particular, I think we're in a much smaller group that said we're going to be taking in addition to that, taking a scientific approach to lowering our carbon impact as well. So taking a broader view of how we design, build, and operate, not just the power procurement. When it comes to investments, as the CFO, I'm a big believer in putting our money where our mouth is. We are the largest issuer of green bonds of any REIT. We just this January issued a large portion of green bonds, close to $1 billion. And we've done that across both euro currencies 2 times now, as well as US dollar currencies. And I believe that amount totals cost to $2 billion plus. So to give you an idea, those dollars raised have to be put towards green eligible spend. We get a third-party attestation on that as well. We put a tremendous amount of disclosure and information on that, not only within our offering memorandums to raise that capital, but also in our ESG report and our website. So we are really putting our money where our mouth is, and we're doing it because it's important. Our CEO, Bill Stein, was on one of the US financial news shows not too long ago, CNBC, and I wholeheartedly agree with him that sustainability in our asset class is moving to becoming a table stakes type of offering, and it's not elective whatsoever. So we really try to be on the front of our feet on that initiative and do it in a holistic fashion, really driven by a head of sustainability at Digital Realty and his team.
Thank you, Andy. Before we move on to the Q&A, we have quite a few interesting questions on the list now. I just want to throw this one on the table. If the business models change slightly, are we going to see one of the hyperscalers potentially acquiring, let's say in the next decade or so, a company like Digital Realty, or even one of the other big data center players? It doesn't have to be related to Digital Realty. But do you think if the business models of hyperscalers change slightly, could one of them acquire one of the big data center operators?
You know, and this is let me be very clear. My answer here is highly speculative.
Yes.
We're kind of just playing what if a little bit, but it's a very interesting question, João. You know, on the one hand, what I often articulate to those hyperscalers is I'm a big believer in focusing on core competencies, and I think those major hyperscalers, their core competencies, in my opinion, is the technology that they're bringing to bear. It's the cloud computing, the edge applications, the numerous services that they're innovating day in, day out. I don't believe the actual infrastructure that we provide as their core competency. I think those are 2 different types of business. They're 2 different types of business when it comes to capital intensity, EBITDA margin, people, operational extent. And I think not dissimilar to other businesses that have focused on their core competencies over time, whether it's large manufacturing or the major financial institutions that shed their office buildings and bank branches and the like and focused on their core competencies. I see the same for these major cloud service providers in the same blush. That being said, there's been a couple trends that have been playing out within our industry that's really aligned with our strategy here at Digital. It's gotten a lot more global. It's gotten a tremendously larger scale. When I started with the company in 2015, just came past my 5-year anniversary, I think we were probably less than 15 billion in enterprise value. Today, we're over 50 billion of enterprise value. We've added numerous countries along the way. You've seen an evolution of the telecommunications infrastructure coming together. Examples like that at Digital Realty have included where in Brazil, we own the fiber. We own a proprietary fiber network. That's a market where we saw a deficiency, or the company we acquired, Ascenti, saw a deficiency from what was available in the market and essentially stepped out of the core business of providing co-location, scale, and connectivity, and provided the fiber network as well. And you've seen other examples, whether it's the tower companies entering the fiber business or some entering the data center business in small footprints. So given the size, scale, global nature, and overall connectivity and I'm saying connectivity, not in the version of a cross connect, more in the do these businesses belong together? I think you could see a world where you saw broader consolidation across the asset class play out. I think at Digital Realty, we pride ourselves in our neutrality, network neutral, partner neutral, cloud service provider neutral, customer neutral. So not forcing any of those participants to go with one product over another. Really trying to create a community that creates the most value for the customers that reside within it. That's something you got to be careful of when you go up or down the proverbial stack. So that being said, I think I wouldn't rule out any of the things, whether it's further industry consolidation, towers and data centers coming together, or fiber companies coming together. I think the global nature, the scale nature, the diversity of product offering our customers are seeking lends itself a little bit to that. And, you know, I wouldn't rule out a hyperscaler in some fashion at the same time. You've seen some of the hyperscalers making some major investments into telecommunication companies in India as we speak. So the lines are blurring for sure. I think we at Digital Realty keep an eye on that, but really focus most importantly on serving our customers where we think we have the strongest core competencies and value add.
That's super interesting, Andy. And it's interesting that you mentioned telecoms as well, because it's something that's been spoken in the backstage at a lot of conversations that we've been having over the last few weeks with some analysts in the industry. So definitely something to keep an eye on. Let's move on to the Q&A now. I think we have about 15 minutes, give it or take. We've already sort of touched on this subject, so green bonds, but I'll just read the question anyway, just in case you want to add anything else. You've also got a nice compliment to this one. You've been called a transformative CFO. That's quite nice. But the question is, so you've been issuing several huge green bonds. Do you have any view on financial modeling used in relation to sustainability?
Well, thanks to whoever asked that question for the very nice comment. I really appreciate that. You know, when we look, so it's a analysis that has to intersect a few things. It has to intersect how we design, build, and operate, where we're deploying capital. It has to intersect that spend that is green, and has to intersect our financing strategy. So there's three legs to the stool that you can't plan in isolation, because we can't raise capital when we don't need capital. We can't make green commitments that aren't going to come to fruition, and you can't build green or operate green if you're not building in general. So we try to take a thoughtful, holistic approach. It's not done on a quarter by quarter or year by year basis. It's over multiple years. We're looking at a holistic approach across all the geographic regions where we invest and operate. We're looking at a holistic approach across our product offerings, and really trying to chart out where we're going to spend, how we're going to operate, pushing the envelope in a green or sustainable format, and then really trying to make the financing piece be the last leg of that stool, saying, here's a way to diversify our capital sources. Here's a way to continue to prudently manage our balance sheet with long fixed rate financings with staggered maturities. And here's a way to really, as I've said, is simply put our money where our mouth is. Say, you know what, we believe in green. We believe in putting the environment first. Let's make some financial commitments, and let's go out and articulate our story to the investor that is like-minded in that approach.
Okay, thank you, Andrew. Our next question comes up from our friends in the Nordics. Do you have any thoughts on the Arctic Connect Asia Nordic subsea cable, and what impact would the cable have on the Nordic data center market?
You know, I will confess I'm not the subsea cable nor the Arctic region or Nordic regions expert. But what I will say, I think that question falls in the category of two comments that I've kind of mentioned. A growing connectivity around the world. You've seen a proliferation of subsea cables across the board in all parts of the world, touching and landing, quote, landing in new locations, bringing higher connectivity, better infrastructure to new parts of the world. And I'd also say that theme, whether it's parts of Europe that I'd mentioned that were not the traditional dominant markets, the non-flat markets, continue to be budding opportunities. Maybe it's partly to do to Brexit, partly to do to the CSPs and GDPR, local data domiciliation, numerous things coming together where as these top CSPs roll out their services and want to support local enterprises or even multinational enterprises with local footprints across numerous sovereignties, they're trying to do that with more disaggregated infrastructure, higher connectivity, and these, whether it's subsea cables, new availability zones, and new infrastructure that we're providing in some of those markets, they all kind of dovetail together. Really a broader theme of digital transformation on a global scale.
Okay, that sounds good. On the price per watt topic now. So how do you see the price per watt or computing power moving forward with increased demand directly leading to an acceleration of digital transformation?
I'm not sure that, no worries. I'm not sure if that's the cost to build, the rate we charge our customers. Listen, so I'll try to guess a little bit what that question is getting at. I think from a technology standpoint, what lives inside our facilities on top of our customer servers, you obviously continue to see technological advances in terms of size, in terms of efficiency, in terms of performance, and in cost. What we've seen being in this business from our seat is those incremental improvements, the old Moore's Law adage, continue to kind of buck that trend and open up new doors for new applications that could not have existed due to technology or due to cost or efficiency. So hence why you see this continued proliferation of demand by our customers that's not only moving from an on-prem solution to a multi-hybrid cloud solution within digital, not only moving from on-prem to a top CSP or cloud provider, but new services that are coming online and more to come. And I think we're just scratching the top of the surface when you look at the incremental technology, whether it's artificial intelligence, augmented virtual reality, commercial Internet of Things, major drivers of technology that are not even, they're, in my opinion, are nascent today. When that translates into what we offer, which is the physical element, the foundation, we've found that no matter what, you still need to be highly connected. That was what our transaction with Interaction was all about, getting the destinations, the communities that have the robust connectivity and access to our cloud service providers. Two, you have to be efficient. This is an efficiency game, so operating in scale, building in scale, insulated supply chains, being front of queue and insulated versus the shocks to the system that we were talking about here. So doing everything in scale is critical. And then lastly, you got to be global. Business and more is global, whether it's top CSPs or the thousands of enterprises that are doing business in some form of global format. Those elements continue. So I think all those trends are a little bit wrapped into what that question was headed, and I don't see any of those things going in a declining fashion.
Okay, thank you, Andy. I think we have time for 2-3 more questions. One question from an anonymous is: has Digital Realty missed the boat in China?
You know, I think that there's certainly times where you say yes, and certainly times I'd say no. And I think today's China world may be a no right now. I think, it's funny that question was asked. I was literally just talking to one of our customers at one of the top 5 cloud service providers yesterday on that topic. And this isn't private or confidential information, but you can look up those top hyperscale customers and look at their various postures on China. They're very big. They're creating incredible proprietary technology, and to operate in a world where rule of law is not respected to the extent that they believe it should be, it has an impact. And to kind of put China aside, or wait for China to move to a place where it's more conducive for their business, was really the feedback that I received from them. They were happy to be patient in that game. I think when you look at Digital Realty's stance, I think China falls into the developing part of the world, similar to some of these other countries, whether it's in South America or India. We're talking about places that you cannot ignore in size of population, economy. It's a place we have not ignored. We are in Hong Kong today. We'll likely be growing our Hong Kong footprint in the future. It's a market that we keep a close eye on, but not dissimilar to how our customers approach it. When we go into a market like that, we need to be confident that our infrastructure, our intellectual property, our capital is going to be protected and safe, and we're able to operate and really deliver on behalf of our customers to the full extent that our obligations and what we've committed to them. So that's a market that I don't think we've missed the boat on today. I would certainly acknowledge there have been successful companies in China already today. We do a very nice job supporting China and other Asia Pacific companies within our global portfolio. And it's a market we're going to keep a keen eye on. And I would think a market we'd eventually enter at the right time.
Okay, thank you, Andy. And a bit of a challenge for this last question, challenge in terms of how long you have to answer it, so about a minute. What's Digital Realty strategy regarding edge computing? It's one of the big trends of the moment.
So edge computing, we made some announcements in our marketplace live, really of extending our product offering, really in partnership with Vapor.io and its kinetic exchange. I think edge is a very exciting opportunity. I think about edge. Edge is it follows the word cloud in the potentially the most confusing words that we've thrown at our industry. Just like, what is cloud? How does cloud work? I think edge has similar dynamics as where is edge? What does edge mean? My view of edge is that it's workloads that don't necessarily have to sit at the foot of a macro tower. I think edge devices and edge compute, edge applications are very much supported within Digital Realty because we are across 44 metropolitan areas around the globe today. Within those metropolitan areas, we don't typically have one single footprint. We typically have a format with a highly connected internet gateway or two, and then numerous other campuses along the periphery. And I think that format captures numerous edge applications and workloads right there. I think those edge applications will still dovetail back through that same infrastructure that we are offering today for our customers through our highly connected gateways or our campus compute. And I think it's a way where we're going to look to extend our product offering in some various form of partnership, like the one we've already announced. And it's really just, again, trying to be a holistic solution provider to our customers so that they can get their edge application needs, their compute application needs, and their network application needs, connectivity capacity on a global scale as needed. So a lot more to come. I think we'll be probably talking about 5G and edge for many months, quarters, and maybe years before the actually real applications come to bear, despite our cellular phone companies selling us on 5G up leveling in their service offerings. But it's certainly a ball that we're keeping our eye on and really view that as a fantastic product extension to what we're already doing here at Digital.
Okay, Andy Powers, CFO of Digital Realty. Thank you very much for joining us for this first virtual Monaco event. Thank you to our viewers at home as well. I hope to see everyone in Monaco in December in real flesh. Until then, thank you very much and enjoy the summer as much as you can. Thank you.
Thank you. Stay safe and stay healthy. Take care.
You too. Thank you.